The Central Bank of Nigeria, CBN, has issued a 24-month ultimatum to banks to raise their capital base to a new minimum in a move to strengthen the financial system. The new requirement puts the minimum capital base for banks with international authorization at 500 billion naira. CBN also raised the minimum capital base for commercial banks with national authorization to 200 billion naira, while those with regional authorization was jacked up to 50 billion naira. Also, the minimum capital for merchant banks is now 50 billion naira, while the new requirement for non-interest banks with national and regional authorizations were raised to 20 billion naira and 10 billion naira respectively. This was announced Thursday night in a statement released by Hakama Sidi Ali, the CBN Acting Director, Corporate Communications Department. The move, which was initially disclosed by the CBN Governor Olayemi Cardoso in his address to the annual Bankers' Dinner in November 2023, is to enhance banks' resilience, solvency and capacity to continue supporting the growth of the Nigerian economy. Quoting a circular signed by Haruna Mustafa, the CBN Director, Financial Policy and Regulation Department, to all commercial, merchant and non-interest banks and promoters of proposed banks, Sidi Ali emphasized that the timeline for the recapitalization program is within 24 months, commencing from April 1, 2024 and terminating on March 31, 2026. And turnover in Nigeria's foreign exchange market jumped to the highest in a single day since 2017 on Thursday as foreign investor dollars poured in. Total trades on the day hit $857.78 million according to data exchange. Analysts say the days of $1 billion in daily trades are near, and that's after foreign inflows into Naira assets surge following the central bank's 600 basis point hike in 1 month, a move it took after allowing the Naira trade freely. Sources say the back of appetite at the Treasury bill auction on Wednesday came from foreign investors. Foreign investors accounted for 75% of the demand at the previous auction on March 13, according to the CBN. The Naira took a breather on Thursday after hiring a 3-month high the previous day. A dollar sold for 1,309 naira 39 kobo, slightly weaker than the 1,300 naira 43 kobo quoted on Wednesday at the Nigerian Autonomous Foreign Exchange Market (NAFEM). The Naira, however, strengthened to as high as 1,271 naira to the dollar within the trading day. The Apex Bank has in the last 1 month raised its benchmark interest rate, known as the monetary policy rate, by 600 basis points to 24.75%. The Minister of Industry, Trade and Investment, Doris Uzoka Anite, yesterday in Abuja inaugurated a National Trade Facilitation Committee with the mandate to enhance seamless trade in and out of the country ahead of the implementation of the African Continental Free Trade Area Agreement, AFCFTA. The minister said the NTFC had made significant strides, especially with respect to the development and review of the National Trade Facilitation Roadmap. The minister noted that the Nigerian government, recognizing the significant impact of NTFC in domestic and international trade activities over the years, decided to utilize it as a National Monitoring Committee on Non-Tariff Barriers as a decision aimed to address trade barriers in Nigeria. Also speaking, the Comptroller General of Customs, Adewale Adeniyi, emphasized the importance of trade facilitation in enhancing economic growth and competitiveness. Now, the Group Chief Executive Officer of the Nigerian National Petroleum Company Limited, Mele Kyari, on Thursday said the over 5,000 kilometers petroleum products pipeline network of the oil firm would be replaced in 3 years. Kyari disclosed this at the 2024 edition of Society of Petroleum Engineers Oloibiri Lecture Series and Energy Forum in Abuja with a theme, Stability in the Energy Sector, Integrated Strategies for Infrastructure, Transportation and Security. The NNPCL boss further stated that the replacement of the pipelines was critical and would be delivered within the specified timeline. Kyari told participants at the lecture series that the recent improvement in the security of oil assets would enable the country meet its crude oil production target for the year, adding that Nigeria currently pumps about 1.6 million barrels of crude oil daily. He said the oil company was working hard to supply 8 billion standard cubic feet of gas into the domestic market through the deployment of various gas projects. He listed some of the infrastructural projects being undertaken by the NNPCL to help bridge the energy access gap in Nigeria, to include the Obiafu, Obricom, Oben OB3 and Ajaokuta Kaduna Kanu pipelines, adding that they were designed to enhance the nation's gas supply network. Uber, the ride-hailing company, has announced its decision not to share the personal data of its riders with the Lagos state government. This comes amidst recent tensions between the company's drivers and the state's authorities regarding data sharing arrangements. While Uber assures cooperation with the government in data sharing, as previously agreed, riders have expressed concerns about potential government monitoring through data shared by Uber and other ride-hailing services. In response to an inquiry from iBrandTV tech correspondent regarding the nature of data to be shared, Uber Nigeria's country manager, Tokwe Akinwumi, clarified that they agreed to share only aggregated trip data as per the data sharing agreement. This excludes any personally identifiable information of users, reflecting Uber's commitment to handling data responsibly in accordance with data protection laws and global best practices. Akinwumi noted that misunderstandings leading to the impoundment of some cars by the state have been resolved, with Uber now focusing on API integration. The timelines for this process have been communicated to the government, reaffirming Uber's dedication to honoring the terms of the data sharing agreement signed on January 23, 2024. Addressing the issue, Lagos State Commissioner for Transportation Oluwaseun Oshiemi explained that all e-hailing platforms operating in the state, except Uber, had independently signed the data sharing agreement with the government. This agreement aims to bolster the security and safety of e-hailing services by facilitating background checks, vehicle inspections, and licensing requirements through API integration. Oshiemi emphasized the importance of API integration for real-time tracking, enabling prompt responses during emergencies, and enhancing user safety. He highlighted Lagos State's adoption of API integration as a leading example in Nigeria, showcasing its commitment to best practices in data sharing and safety measures within the e-hailing industry.